What's up, everybody? We are here on Christmas. Got Christmas special today. Thought I would give you guys, a little Christmas present, you know. But yeah, today's lesson. I'm just gonna go over a couple little topics. Go over different ways of finding liquidity. Other than you know our regular equal highs and equal lows. And we're going to go over manipulation of the retail market patterns, right? So, along with those equal highs and equal lows, you know, we're going to be focusing more on the wedge type of patterns. We'll look at a couple other patterns, head and shoulders, uh, you know, um, trend line manipulation, stuff like that. But we're going to be focusing more often on that wedge breakout pattern. And then next, last, we're going to go over how institutions persuade retail around certain highs and lows and previous highs and lows. So what I mean by that is, high of the weeks or high of the week, or previous high of the week, low of the week, right here. So this is what I mean by highs and lows, right? Previous highs and lows that institutions can, uh, set up retail crowd to get in positions either out of greed, out of fear, out of missing out of a trade, um, anything like that. But just take a moment to look over these. The more um, I'd say your more focus, uh, the highs and lows that you're gonna focus more on would probably be the weekly highs and the daily highs, or weekly highs and lows and the daily highs and lows, right? So there's 8 focus areas you need to be thinking about when you're getting in a trade, right? Because, for instance, I'll just do a quick example up here. Say that there is a weekly high right here, right? But in that weekly high, you see equal highs, right? So you know that there's money in this area, okay? So you would want to essentially wait for price to get back up to that weekly high, or the high of the week right here, or last week's high, depending on whichever week you're in. But essentially you would want price to come up here, capture the liquidity, and go down, right? But if you don't understand the highs and lows of the market, you can get caught up in a situation like this, and then you have your stop loss above that high, and then price does something like that, right? So these volatile focus areas, they're very important, right? Highs and lows. You don't want to get caught in the middle of a you don't want to be trading in the middle of a consolidation, or in the middle of a phase, right? You want to wait for some type of uh, manipulation to present itself, right? That's when institutions are showing that they're you know they're putting a lot of money into the market for a certain reason, right? So yeah, keep these highs and lows in mind. But yeah, so um, that also goes in with finding different different ways of liquidity. We just did an example of equal highs and lows, but you know around the high and low, or the previous high and low of the week or of the day, right, are areas to take into consideration when you're looking for quick profits. So we'll look at some past examples that I have taken. Just a couple trades line up right here, and we'll just go over on this, and we'll talk about how institutions persuade retail, right? So first we start off right here. We see, obviously, you can see it's just sticking out like a sore thumb, that head and shoulders pattern, right? So this gets formed, and where is retail most likely selling, right? They're either selling at this the top of the right shoulder, or they're selling that breakout of that neckline right down here. So there's a bunch of positions right here and a bunch of positions here. Now, what do the banks do? What do the institutions do? Right? So a lot of liquidity, a lot of money is being built up right here. And you see over here to the left, you gotta look left, to get right. So right here we have, what is this? The previous week's low, right? So when we go back to look at that chart, you remember the previous week's low is to an area to take into consideration. It's a volatile area, right? So look what the institutions did, right? They just barely came down and just breached that that low. I guess that doesn't want to delete, but they just breached that low. So any buying beyond this point right here, any buying after this low was broken is valid, right? And then look what happened. It took off, right? It took off. This is on GBP NZD. This is over 100 pips. So let's move on to another example here. Oh, but yeah, it broke that previous week's low right down here. You see that wick entry, and then it flew. So right here, that LWH last, or LWL, that last week's low, right? So here is a little manipulation pattern I saw on the dollar, and what I am talking about is I said we're going to focus more on wedge patterns. So manipulation of retail, right? So let's look at this example. We looked at this one already. So let's look at this example of the dollar that I had. Right? So what I saw straight up was, you can see it already, but this wedge pattern right here. Okay, so what am I thinking, right? Whichever way this breaks out, I'm going to do the opposite. Okay, I'm going to do the opposite. So if retail buys out of this, I'm going to sell. And if retail sells out of this, I'm going to look for a buy. Okay, and just sure enough, when I looked at this, when I looked at the chart, I saw this right away, and I noticed that retail was selling here. And what happened? There was, I think this was either the previous day's low or last week's low. I'm not sure. Could have been last week's low or the previous day's low. Either way, I drew this, W formation reversal out. I was expecting the market to go up after a stop hunt of last week's low, after an institutional stop hunt of last week's low, and we see that that's exactly what happened, right? So this is after the, see how it came down just barely right here of last week's low and took off. So what happened on this was either, well, a couple things could have happened on this. Retail was selling that, so they had their stop losses up here. And then I'm sure that some people were buying this, maybe there was positions in this wick, who knows, who knows, and maybe they had stop losses down here, right? So when this wedge was forming, the breakout had gone to the downside, okay? So they're capturing liquidity. They were capturing sell side liquidity first before going and capturing buy side liquidity, okay? So that is a retail market pattern that is a perfect example of manipulation, and we have more. I have more to show. Here's an example I caught last week on Euro JPY. Actually, what I saw, same same setup, guys. It's the same setup. So retail, I see the wedge, right? You see the wedge pattern here, and I see retail, aggressive move up. This is institutions persuading retail. You see the aggressiveness of these candles right here. How they just there's all this consolidation right here, and then this fast impulse up, right? That fast impulse up. But what happens? There's money right here above last week's, or this, I think this was actually previous day's high, so it'd be the PDH, right? And what happened was institutions persuaded retail. Let me clean off this a little bit. So right here, institutions broke out the wedge, right? So retail's fear buying in, right? And what does price do? It comes above that previous day's high or last week's high, whichever one, it doesn't matter. It comes up and captures liquidity, right? Captures liquidity, okay, above this area. So now let's go to the next, aftermath after the trade was over, okay? So this is after the trade, right? And this was just another beautiful trade last week. A lot of pips, a lot of money, but yep, you need. Oh, that's bad. But yeah, you guys see the liquidity up here, right there. What is retail doing, guys? Buying out of this wedge pattern, and right here, this aggressive move up is the persuasive, um, the bribing of the institutions try to do. This is the bribing that, um, you know, institutions try to get retail to do right here in this area. And this, particular, candles, you see candles like this, and then, you know, we, smart money, we trade, you can see clearly, well, I drew the line a little off, but right here, this outcome candle on a higher time frame was actually my entry. But right here, this dashed line was the previous day's high, right? And it came up, price came up, M formation, right? M formation reversal, and broke that. And they mitigated out of orders, out of the outcome candle to the left on a higher time frame. I think it was the 1 hour or the 4 hour, probably the 4 hour. But another setup, guys, like this, those wedge patterns, right? Wait for the breakouts to happen. Wait for stop hunts above the highs or lows, right? Wait for confirmations, and then really, mainly check if there's a play off of an outcome candle right to the left. Okay, so that was my trade on EJ. Another beautiful setup. And so we can take these off. Okay, so now we have this setup right here on GBP USD. And it's basically the same thing, guys. So we see that, it's with these types of setups, I see this type of, I'm sure you guys are going to ask me, what time frame and all this, and it happens on every time frame, and we'll get to that later on in the lesson with these with more example charts. But if you want to know what time frame I see the manipulation like this the best on, is the 15-minute. The 15-minute time frame is the one I see. That's me though, and you might see it the best as well, but that's me preferably. But what we see is, this is actually last week on GBP USD, and what happened was, well, we see that we see that wedge pattern, right? That breakout right here. And what happens? What happens? Let me get green out right here. So this high of the day gets created right here. You see this high of the day right here? It gets created, and then what happens after that? We get this M formation, institutional stop hunt right here above that, the initial high of the day, right? And this thing fell for like, I think it was like 90 pips or 110 pips down here. So yeah, that was a beautiful setup, clear, clean, and cut. Institutional stop hunt right here. You see this big, massive candle, big body, long wick above the initial high of the day. So it collected that money above the initial high of the day and got out of there, right? So the next one right here, basically the same type of thing, right? And we're getting deeper into this. So the this one, the charts are going to get a little bit more in depth. This is kind of, you know, something that you guys are going to have to back test and go over, right? Multiple times. Maybe watch the recording multiple times, right? To understand this, because, um, it's not a hard concept. And if you add this as confirmations in with smart money, right, you will be slaying the market, right? You will be slaying the market. I can almost promise you, right? Can almost promise you that. But same setup right here. Um, this one, right? So first off, we had that. You see this initial red box right here that I have. This is Asian session, right? So Asian session, we see consolidation, but not only just consolidation, right? What type of consolidation? We see wedge, uh, this wedge pattern, right? And what happens? Price flies up out of this wedge pattern, right? Price flies up. Where does it go? Previous day's high right here. What's up here? Money. Now, like I said, guys, if you add this in with smart money, you see this area over here. Oops. You see this area right here to the left, that last up candle before that down move, right? So what happens? Price beautifully goes to that area right here and falls a good amount of pips, right? So I hope a little bit of this is clicking for you. Um, it's not a hard concept to grasp, especially when you understand smart money, and also especially if you actually used to trade with the majority of retail knowledge, right? Breakouts, break and retests, trend line back, all that. You're going to probably actually see this manipulation faster because you used to trade like that, right? If you're fairly new to even smart money, you're gonna have to put the time in. You're gonna have to work at it a little bit more, okay? But don't give up on yourself if you don't see stuff like this, right? So price broke above that previous day's high on this. Just to recap on this, price broke above that previous day's high, and we see this as Wednesday, right? So automatically we're thinking that we can get some type of midweek reversal. So the breakout, retail is buying. What do? We do the opposite of the crowd, and we sell and we take retail's money because they have stop losses down here, and their stop losses was our take profit, right? So next example right here. This one is juicy, and yeah, the next two are actually really juicy. So right here, we'll go in a little bit of more in depth with this one. But main thing that you see, right, as retail, you know, not even as retail, I should say. I should say as a trader in general, following the trend, like is key. The trend is your friend, right? But there's a specific way to follow the trend. And trend lines is not the specific way. And I'm going to show you an example right here of why. And here, you see retail. Let me get a different color here. Let's go yellow. So we see retail down here. Buying, 2 touches, 3 touches, right? See right here, retail buys the 3rd touch, right, of the trend line, and they put their stop loss below that previous day's low, or the previous low of the day, right? So this was that initial low of the day that got created, and retail is buying in here, right? So retail is buying in this area right here. And what happens? What happens immediately? You know, almost 2 hours later, price comes down, hits their stop losses, and goes up, right? It happens the majority of time to retail, right? It happens a lot. So an institutional stop hunt below that initial low of the day, right? The first low of the day. You see this dotted line right here, right? This is Asian session right here. So in Asian session, we created that initial low of the day, okay? And what happens? We get that stop hunt right here. Um, hitting early buy positions, which were up here, hitting sell stop positions, which are right here. So if price goes through, they think it's just going to keep going down, but in reality, price reverses the majority of the time, and that's what happens. So right here, right, right in this area is where you should have been buying. Any dip below this previous low, this initial low of the day, any buying would have been good. TP at the high, right? So so we're both buying, right? Institutions are both buying, right? I mean, institutions and retail are both buying, right? But why is it better to go in line with the big whales? Why is that? Because one, accuracy, two, your risk to your reward, right? Your risk is smaller, right? So say I got in here and that was my stop loss. Say if I was retail and I bought here and my stop loss was placed down here, right? It got hit. My stop loss would have gotten hit if I was buying off of this trend line right here. And also, you can even say that some retail sold the breakout of the trend line and got reversed on, right? So understand that manipulation and following the trend, the retail trend, is not the way to go, right? You want to follow the trend. Yes, the trend is your friend, and that is key. But doing it in a fashion like this will not give you longevity in the markets. So the next example we have is quite similar to the last one. We have 1 touch, 2, 3, and then on this 4th touch, you can clearly see, right? So say retail sold that 3rd touch. Cool, they got profit. That's awesome. They extended their trend lines out. They said, great, more touches we get, the stronger that they think, they think that the more touches on a zone that they get, the stronger it becomes. But in fact, actually, it's the complete opposite. The more touches on a zone, it's going to break through it, right? It's like, imagine this. Imagine if you had a wall right here, and you, this is going to be a brutal illustration, but imagine you had a wall here and you kept punching it, right? You just kept punching this wall, okay? Do you think that the wall, the more you punch this wall, do you think that this wall is gonna just keep getting stronger, or are you eventually just gonna, go through it? Are you eventually gonna go through it, right? You're gonna go through the wall eventually. So after one touch, two touches, three touches, you can see the significant difference in the drops that the market did, right? So with this playing out, we have more retail selling on that fourth trend line bounce, and you can see profit went down a little bit, and then what happens? What happens? The market just skyrockets it, and it flies, So, and oh, if they sold here, right? Let's say that they sold right here, right? Where this blue line is, they sold here. And let's just say some put their stop loss here, some put it here, and some put it here, right? So what happens? Where does the market go? Straight up, collects all the money, right? And then just heads up, right? It never even comes back down. So once again, trend lines do not prevail. The institutions and banks and big money players are setting retail up for failure just like this. So next, we're getting closer to the end here. Next slide is back to that retail wedge pattern, right? That retail wedge pattern. This one is very simple. No need for a um, depth explanation, but we see that wedge pattern right here, and then the low of that wedge pattern. So what happens? Retail selling out of this wedge right here, right? And institutions, they see all of this liquidity right here, and if retail sold right here, then I would imagine they have stop losses above these highs, right? And what happens? The market goes down, and then comes up, right? Capturing this liquidity here and this liquidity here from all the retail traders that sold right here off this breakout. Okay, clear and cut. Okay, so now this last one is the same exact thing. This one is, I like this one right here. So what do we have? We have, you guys can see this clearly. We have this wedge pattern, right? And this is on the 15-minute time frame. These this blue boxes right here on the left and the right are just it's called the uh um weekend, Saturday, Sunday. So this is just the market open, right? And then market close. And then you have Sunday, Monday, right? And then you have Tuesday, Wednesday, Thursday, and then Friday right here. So what do we see during, Wednesday and Thursday? Tuesday, Wednesday, Thursday are your, ideal days to trade, but Wednesday and Thursday, you see the most setups occur. So what happens this week on NZD/USD specifically? What happens? We identified that we had a retail wedge pattern, right? And we can also vouch that retail sold here, retail could have sold here, here, retail could have bought here, retail could have bought here and here, right? We see all of this, right? And then that wedge breakout happens right here. Okay? What happened when Sunday opened, we created a high of the week here and a low of the week. I'm going to delete some of this. When Sunday opened, we created a high of the week here and a low of the week down here. You guys see this LOW? That's the low of the week, right? So as price is coming down here, right, to stop hunt all of this, retail is selling, right? Retail is selling all of out of that breakout, right? They're selling down. But what do the institutions do actually? They see uh, they see buy stop losses and sell stop positions down under this structure right here, under all of this, right? So what do? They aggressively drive price down, inducing retail to sell more positions. And then what happens right after that? Price flies, right? Okay. So identifying where retail is playing, right? Identifying where retail is playing, identifying where institutions are playing, and taking advantage of both of them is the main key here, the main priority, right? So keep in mind these high volatile focus areas, you know, there's 8 of them, but majority of the time, like I said, majority of the time you're really just going to be using this, this section right here, the weeklies and the dailies. That's what you're mainly going to be using. But you know I hope this helped some of you guys. It's kind of I think it was a fun lesson, a little Christmas lesson. It's nothing too serious, and I think that's what it's all about. It's not you know have fun with what you're doing, right? And love what you do. Okay. So yeah, I hope you guys found this video useful. Um, also, uh, you can go follow us on IG at Outcome Reach. You can reach out to us right here and send us any send us any questions. We'd love to help you guys grow as traders, and also hope you guys have a blessed Christmas. Enjoy your time off. Enjoy your time with your family, your loved ones. Um, just really embrace moments on days like this with them. So you know. Yeah, I hope you guys all have a wonderful Christmas, and I will catch you guys later. Peace out.